What is going on, guys? In this stock analysis and due diligence video, we are going to be going over the ticker symbol CTRM, which stands for Castor Maritime. Now, this is actually a value stock where the value and the price of this company right now is lower than what is believed to be the intrinsic value of the company in the future. So, before we go into the details of this company, my name is the Cash Creator, and I want you guys to consider subscribing to this YouTube channel right now and giving me a follow on Twitter too for more hot stock picks. Also, as you all are probably aware, cryptocurrency is absolutely hot right now. It's absolutely booming. So if you use the link in the description below to click and create an account on Binance, you get a free crypto share and I get a free crypto share too. So it's a win-win scenario if you are interested in cryptocurrency investing, because it is absolutely hot right now and you can make a lot of money just like you can on stock trading. So let's get right into the video. First and foremost, what exactly do Castor Maritime do? So CTRM are a growth-oriented global shipping company engaged in the seaborne transportation of a wide range of dry bulk commodities along worldwide shipping routes through their ownership of dry bulk vessels. So they have all these vessels. I believe they currently have 14. They had 6 in 2020 and now they have 14 in 2021. Okay, so what dry bulk shipping is basically the movement of commodities such as iron ore, coal, grain, etc., stuff like that. Just commodities in huge amounts, so in bulk, with their vessels that are owned by Castor Maritime. So like I said, this is a value stock. It's low price compared to previous price history and also the current and future intrinsic value of this stock. Another thing to mention is the fact that they were profitable in 2018 and 2019, but not profitable so far in 2020. And this is due to the trade routes being shut down due to COVID. However, they still had 35% year-on-year revenue. So let's look into the financials real quick with you guys. I'm going to go over here onto Webull. So this is the charts. This is the 4-hour chart. But let's look onto the balance sheet. And as you can see, they have a decent debt to asset ratio. It's 20%. Okay, they have many more assets than they have debt. Okay, and we're gonna go on to the income statement, and as you can see, they haven't been profitable this year due to the huge restrictions based on COVID, but they were profitable in 2018 and 2019. So despite being in a net loss in 2020 so far, we're going to go on the revenue, and as you can see, if you go on the annual revenue, there's been a 35% year-on-year growth, and if I go back to quarterly, as you can see, there is still good revenues. Okay, so yeah, as you can see, there is still good growth. That's the quarter of 2019, Q3 2014, Q4 2019, and then in Q1 to 3 there has been rises despite the issues with COVID. Okay, so obviously trade routes got shut down due to COVID, but they have, as we're going to discuss in the next slides, they have started to reopen again, because we are looking at potentially the end of COVID-19 with vaccines being rolled out, etc. So this is now a ticking time bomb, which could see good growth as COVID starts to end. So as I said, the fleet has grown to 14 vessels. 2 recent acquisitions of 2011 built Kamsarmax and then the 2005 built Korean vessel, and I'm going to show you guys just some evidence. As you can see, they announced this just a few days ago, March the 12th, of this new vessel acquisition. And then also as you can see, here is another vessel that was announced. Okay, so as you can see, they are making aggressive expansion efforts by buying all these vessels, and then we're going to show you why these vessels are important. So as you can see, here are the daily charter rates. So as you can see, this is the Kamsarmax that was just recently acquired, and it costs $18,000 per day to charter this vessel, and obviously the revenues goes to Castor Maritime when they are shipping for all these other companies, etc. Okay, so as you can see, over the next 5 to 7 months, the Kamsarmax is already it's already started to move. It's already shipping stuff. So over the next 5 to 7 months, it could bring in approximately a revenue between 2.8 and 4.2 million if you do the maths. 18,000 18.8 thousand times by the number of days in those months approximately would be a huge amount, and then that times by 14 vessels. Obviously every different vessel has a different daily charter rate, so they have 14 vessels here at Castor Maritime. But let's say if each vessel was 18k per day, which it's not, it's probably some are less, but let's say approximately 18 a day, that would be 250k every single day, which is over 90 million revenue in a single day. Sorry, in a single year. That's a mistake. Okay, so that is huge amounts of revenues, and you compare that to the current revenues of 2.79. So the potential future growth of this company is enormous if COVID starts to improve, and then the shipping routes open, and then they start utilizing their fleet properly. Because you have to remember that these vessels, some of these vessels were acquired recently. They only had 6 in 2020, and now they have 14. So the revenues now that is happening right now won't even show in the financials, in the latest financials. They'll show in future financials. So it may take some time for the financials to pick up, but I think this is a good long-term value stock. Okay, guys. Again, like I said, they've spent over 100 million on new vessels in 2021, so that shows that they have cash in hand, and they are looking for aggressive expansion. And I'll tell you, one of the main reasons that they do have cash in hand could be because the CEO, he's called Petros Panagiotidis or something like that, however you pronounce it. Excuse me if I'm wrong. If you're Greek or Cypriot and you're listening to this, apologies. But his father is also a billion-dollar shipping magnate, so he has experience in this industry. He can call upon the expertise of his father, who is on the Forbes richest list in the top 500, I believe. I'm not 100% sure. And like I said, bulk dry shipping is now starting to open again. China leads the world in global trade, and the pandemic in China is pretty much in a much better situation than it is in the US, and Europe. China has handled it a lot better. So as the world leader in global trade, the shipping has opened up over there in the Far East. So to continue, another thing that I have to mention is that CTRM officially only has one employee under its payroll, and that's the CEO. Should that be of concern to you? The reality is no, and the reasons for that is because it's quite common in the shipping industry. For example, Danaos, with a ticker symbol of DAC, is another Greek shipping company. It has a market cap of nearly 1 billion, and it has 4 full-time employees. And the reasons for this for Castor Maritime is because the CEO's sister runs shippings and logistics and maintenance company that contracts their staff to Castor Maritime vessels. So like I say, if for example, if you're going to contract out work on your fleets, you might as well keep it in the family. So if Castor Maritime is hiring people to work on the vessels, they might as well get staff from his sister's company, so the money stays within the family. Okay, which is pretty smart, if I do say so myself. There could be a future merger on the cards to get further reach in their industry, so there is more future potential. Now let's analyze the stock. So as I said, the current share price is 0.94, so 94 cents. If I go back, I zoom out on the 4-hourly chart, as you can see over here, it did hit highs of $1.95 on the 2nd of November. So it has hit decent highs. Also, I would like to point out that it was $19 in 2019, but the reason for this is it was probably a reverse split. Lots of reverse splits to try and uplist to Nasdaq. So as you can see, it was, you can see this. The price was a high of 19 and low of $4.9. And if I minimize this, as you can see on the RSI is hugely over there. So obviously it went down and then it went back up. So maybe there was another reverse split there. I'm not sure. Okay, so there has been good price action previously, but then it slowly started to bleed out. As you can see, the main impacts of COVID were starting to be seen in around March 2020 time. So if I go to March 2020, as you can see, it's around here. Where is it? Here, March 2020. So that's when, around when the decline started. COVID actually came to light in the end of 2019. So it started to happen in early 2020. That's when it started to come to the rest of the world in January, February, and then March it really started to come. So ever since COVID was announced, it started to slowly bleed, and then when it really started to become a big concern was in March time. So in March, as you can see, there was further drops from a share price of around $1 all the way down to a low of 10 cents. Okay, so that is huge, huge, reduction in share price. And then slowly, as COVID has started to be defeated, the share price is picking up again. As you can see, there's been good price action in 2021. So in January, as you can see, the share price starts to go up every day, and then we saw this huge bullish engulfing candle over here on this date, on the 27th, and then since then that's obviously a really big bullish signal, and since then is continued to rise. So if I go back onto the 4-hourly chart, as you can see over here on the 4-hourly chart, again right now, so there was a uptrend over here, and then there started to be a downtrend from December. As you can see, from a high of $1.95, there was lower lows and lower highs. It seems like a downtrend, and then it looks like now there's just a bit of sideways movement in March. There's not a huge amount of price action going on despite the huge volume. That is the stock analysis section, and as I said, it did hit $19 previously. There are 500 million shares outstanding, which I'll show you over here, and that is very, very poor. 500 million shares outstanding, that is not good. So that could suggest it may be hard to get the price up a significant amount. There are a huge amount of volume though on these trades. So if I go back over here, and you can see the volume 31.95 million and an average 3-monthly volume of 190 million. So there is a huge amount of volume, which is always good if you want to day trade, for example. Okay guys, so that is the end of the video of the stock analysis. However, the final section is the risks of this company. That I do have to say is that what I found quite odd is the registered address was this address here, which is in Cyprus. It's an apartment, so I did find that odd that there's no office or anything like that. Another risk is potentially if the pandemic continues, or there's some sort of other COVID strain, it could be quite deadly for this company, because again there could be a huge decrease in share price if trade routes are closed again. And again, like I said, the shares outstanding is an issue. So that is the video. Thank you for watching. This is the Cash Creator signing off. Peace out.